Morning, everyone. For today's session, we will discuss about the accounting equation. Okay. In the previous discussion, we discussed that in accounting, we convert the data, we convert the accountable transactions and events into an output, and we call that financial statements. Financial statements tell us how the business is performing, whether it is profitable or not. It also shows us the financial condition of the entity. But the question is, how did we arrive on the amounts reflected in the financial statements? Actually, the most basic tool of accounting is what we call the accounting equation. Okay. In accounting, properties are called assets, and rights on properties are known as equities. And if we are to show the relationship through an equation, so we have here assets equals liability or equities. Okay, assets equals equities. And assets, these are economic resources or things of value owned and controlled by enterprise from which economic or future economic benefits are expected to flow. Okay, equities, on the other hand, are derived from borrowings, contributions of owners, and even income from operations. Of course, that also includes the expenses from operations. So therefore, based on our sources of equities, so we have here the claim of creditors, and that's liabilities, and also the claim of owners or proprietorship. But in our next slide, we will expand this relationship or this equation that will include the claim of owners and the claim of creditors. Okay. So we have here assets equals liabilities, and this pertain to the claim of creditors, and owner's equity. We use this as our claim for the owners. Okay. The equities that we have in our previous slide is just a generic term to refer that the rights on the properties are actually have two sources, one from creditors and one from the owners. And this is now our accounting equation. Okay, liabilities present obligation or present obligation. These are present obligation of the entity to transfer an economic resource as a result of past events. While owner's equity, this is the residual interest in the asset of the enterprise after deducting all its liabilities. And actually, this represents the claim of the owners. And the presentation of owner's equity in the financial statements, particularly in the statement of financial position or balance sheet, depends on the form of business organization. Okay, for sole proprietorship, you have to remember that there is only one owner's equity that should appear in the statement of financial position. For partnership, on the other hand, the owner's equity should reflect the equity for each partner. However, for a corporation, it's the stockholders' equity that we use in the statement of financial position, and that includes the share capital and retained earnings, among others. Okay. Our discussion for the whole semester or for today's session will actually focus on the sole proprietorship. That is why in the owner's equity, what you will see is only one owner's equity. Okay? And now let's move on to the effects of common accounting transactions to the accounting equation. Okay, so we have assets equals liabilities plus owner's equity. Okay, let us again recall that owner's equity are affected by the investment of the owners, withdrawals or drawings of the owners, the income from operations, and expenses from operations. Okay, I hope that is clear with you. So based on this accounting equation, so we have here transactions that we can derive, common accounting transactions that we can derive. So if we have an increase in assets denoted by big letter A equals increase in liabilities or denoted by big letter L, or an increase in owner's equity denoted by big letters OE. Okay, so that's actually two common accounting transactions. An increase in asset equals increase in liabilities, one. Increase in assets equals increase in owner's equity. So second transactions or number two transactions. Another one is decrease in assets is equal to decrease in liabilities. So that's third transaction, common accounting transactions. And decrease in asset equals decrease in owner's equity. So this equation actually reflects, these two equations reflect four common accounting transactions. Again, one, increase in asset equals increase in liabilities, or increase in assets equals increase in owner's equity. Okay, that's number two. Number three, decrease in asset equals decrease in liabilities. That's number three. Number four, decrease in assets equals decrease in owner's equity. Okay, so let's move on to the next. Okay, how about if one of the items in our accounting equation, so do we have that kind of transaction? Yes, we do have. So we have an increase in asset equals a decrease in another form of asset. Okay, so next, okay, next equation that we can derive or we can show you. Okay, we have assets equals liabilities plus owner's equity, in which the transaction pertains to liabilities transaction. And what is that? An increase in liabilities is equal to a decrease in another form of liability. Okay, so that's actually equation number 6. How about this equation, which involves the liabilities and owner's equity elements or items in our accounting model or accounting equation? Okay, so a decrease in liabilities equals an increase in owner's equity. Okay, so we'll proceed to the next slide, and that is related to the illustration of these 7 equations, which reflect the common accounting transactions. Okay, so let's start with increase in assets equals increase in liabilities or an increase in owner's equity. Okay, let's have here number 1 transaction. On May 1, 2023, G and Season decided to start a computer rental business with an initial cash investment of 350,000. So again, let's use the accounting equation. Assets equals liabilities plus owner's equity. Okay, in this transaction, what elements or what items in our accounting equation are affected? So we have the assets because there is a cash involved, and what else? So since the cash is actually the initial investment of GN, therefore our owner's equity is also affected. So we have here under the assets column, we have 350,000 cash investment, and we use account title cash for that. But you will learn more of the account title or titles later on. What we are focusing now is the accounting equation that assets is equal to liabilities plus owner's equity. Okay, so we have cash under assets, 350,000, and we also have under owner's equity, 350,000, and the account title that we will use is actually the name of the business owner, G Season, and we only include the word capital. Okay, G Season Capital, 350,000, and we maintain the equality. Our assets, 350,000, is equal to our equity of 350,000 pesos. Okay, number 2. On May 3, 2023, G and Season purchases 5 computers from RDL Corporation for 200,000 on credit. Okay, again, let us analyze what items in our accounting equation are affected. Okay, since the transaction involves computers and it's on credit. So therefore, computers, these are our assets. So we have 200,000. And on credit, so we have a liability, or GN Season has a liability, and we use the account title accounts payable 200,000. The equality is maintained. Assets is that 200,000 and liabilities in the form of accounts payable is 200,000, so they are equal. Okay, next transaction, decrease in assets equals decrease in liabilities or decrease in owner's equity. Okay, let's have an example. On May 10, 2023, GN Season paid RTL Corporation cash of 40,000 as partial payment for the computers bought last May 3, 2023. Okay, so let us analyze what are the accounts or items in our accounting equation which are affected by this transaction. So we have cash, and then related to our account. So we have here assets, our cash decrease, and that is denoted by a negative sign, and our liabilities in the form of accounts payable decrease. So there is a negative sign also in the 40,000, okay, amount. So we maintain the equality, our assets, negative 40,000, liabilities, negative 40,000, okay? Number 4, on May 15, 2023, Miss Season paid salaries employees amounting to 10,000. Okay, again, the same question, what items in the accounting equation are affected? Okay, since there is a payment of salaries, of course, our cash or GN's cash was affected, and that is an asset. And the other one is salaries, that's an expense, and that's actually affecting our owner's equity. So using the same formula, equation under assets and format, we have a negative 10,000 of cash, and under the owner's equity, salaries expense, the same negative 10,000. Okay, so I hope you can follow with our discussion. Okay, number 5. Okay, we concentrate on the assets item on the accounting equation. An increase in asset equals a decrease in another form of asset. Okay, let's have an example. On May 16, GN Season bought furnitures from BRL Company by paying 45,000 cash. Okay, there are two items mentioned here. We have the furnitures. So there's the furnitures and the cash. Okay, so meaning under our assets, we will reflect, or GN will reflect furnitures 45,000, that's positive, and cash negative 45,000. Okay, so if you get the net effect or net amount, that is 0. Again, we maintain the equality of your assets and liabilities and owner's equity. Okay, number 6, what if the liabilities item only of the accounting equation? Increase in liabilities equals a decrease in another form of liability. Example, on May 17, 2023, GN Season issued a promissory note to RDL Corporation in the amount of 100,000 as partial settlement of the accounts payable to RDL. What are the items affected in our accounting equation? Based on this transaction, remember, GN Season issued a promissory note. So that's a notes payable, another form of liability, and that is as partial settlement of the accounts payable, which is the previous liability. So if you are to put that in our accounting equation, okay, under the assets, no entry. Liabilities, we have two items. The notes payable, we have an increase of 100,000, and then our accounts payable will be decreased because this transaction is actually pertaining to an increase in liability and a decrease in another form of liability, or a decrease in liability and equals to a decrease in another form of liability. Okay, number 7. What about liabilities and owner's equity items in our accounting equation or accounting model? Okay, a decrease in liabilities equals a decrease in owner's equity. Okay, so let's continue. So number 7, on May 18, 2023, Miss Season paid the 60,000 accounts payable to RDL Corporation from her personal cash. Okay, remember in the accounting principle we mentioned concept, accounting entity concept. So the personal transaction should not be merged with business transaction. However, in this number 7, the intent of Gian is to put additional investment. Okay, so she made additional cash investment to the business. So here, the 60,000 pesos reflected is actually pertaining to the accounts payable and the same time additional cash investment of Miss Season. Okay, using the same format, we have under the liability section accounts payable because the 60,000 is for the payment of accounts payable. So we have a decrease in our accounts payable and an increase in G season capital of 60,000. So negative 60,000 and positive 60,000, that's zero. So we maintain the equality of our accounting equation. Okay, let's have here the summary of the transactions number 1 to 7. So what did you notice? Okay, so the total assets after combining or showing you the details of our transactions 1 to 7 will reflect a final amount of 500,000, and for liabilities it will reflect a 100,000 final balance, and owner's equity 400,000. Okay, so just to show you the equality of our assets to liabilities and owner's equity, so 500,000 equals 100,000 plus 400,000. So that's our accounting equation. Okay, so let's have an exercise. Okay, fill in the amount of the missing element of financial possession. So we follow the basic accounting model or the accounting equation. So given this table, you have here the assets column, liabilities column, and owner's equity column. There are missing amounts in the element of financial possession. So your task is to compute for that amount. Okay, so we know that asset is equal to liabilities and owner's equity. Okay, for number 1, the missing amount is the owner's equity given the assets and liabilities. So how will you compute for the owner's equity? Okay, so for number 1, your owner's equity is how much? It's 210,000. So how did you arrive? You just subtract 800,000 minus 590. That is equivalent to 200,000. To check, 800,000 equals 590,000 plus 210,000, and the total of 590,000 and 210,000 is also 800,000. Okay, so about number 2, 750,000 assets, owner's equity of 590,000. Same method, you have to deduct 590,000 from 750. So you will arrive at 160,000. Okay, so 750,000 equals 160,000 plus 590,000. Okay, can you follow? Of course. Okay, this is just a piece of cake for you. Okay, number 3, question mark for assets, 123,000 liabilities, and 672,000 owner's equity. Okay, how much will be your assets? You just add the liabilities and owner's equity, and that is 795,000. Okay, how about number 4? Owner's equity is missing. Assets and liabilities are given. So what will you do? Okay, you will subtract the liabilities from assets, 715,320 minus 388,900. So that is 326,420. Okay, number 5, asset section or assets is missing. Okay, you have liabilities and owner's equity. However, it's a negative. Okay, negative balance. So it's like a deficit. So how much will that be? Okay, assets again equals liabilities plus owner's equity. So 825,000 plus negative 110,000. So that is 715,000 pesos. Okay, next. Okay, next is related to the transaction events on the basic accounting model. Okay, so you have here 5 transactions. A is for assets, L is liabilities, OE is owner's equity. The requirement is for you to determine the effect of the above transactions on the assets, and that's letter A, big letter A, liabilities, big letter L, or owner's equity, big letters OE. Put the appropriate sign, plus or positive if increased, negative if decreased, or 0 if no change in the appropriate column. Okay, so let's answer letter A. Paid salaries for June, 30,000. What items in the accounting equation are affected? Paid salary. So you have cash payment here. So your cash is affected and that's an asset. And salaries, these are expenses and that affects your owner's equity, and therefore your assets and owner's equity are affected. So what's the effect? Is it a plus, negative, or 0? So definitely it's a decrease. Your assets decrease and your owner's equity also decrease. How about your letter L? So 0, okay? You just put 0 here under your L column, okay? How about letter B? Acquired equipment on credit, 100,000. I already put the answer. Okay, show the answer. Okay, so equipment is an asset. You receive equipment and that's an increase in your asset. However, it is on credit. Okay, it's a liability. So therefore, your liability will also increase. How about your owner's equity? No effect. So just put 0 under OE column. How about letter C? Purchase supplies in cash, that's 4,000 pesos. Okay, what items or elements in the statement of financial position are affected? So this is related to our cash and related to our supplies. Both items are part of assets, and therefore an increase in asset is equal to a decrease in another form of asset. Okay, no effect on your liabilities and no effect on your owner's equity. How about letter D? I already gave the answer. Okay, additional investment by owner, 150,000. So that's cash. So definitely your asset will increase, and additional investment affects your owner's equity. So therefore, also an increase on your owner's equity. For your liability, no effect. So you put 0 on that liability section. How about letter E? Receive payment for services rendered, 20,000. Okay, 20,000 automatic, that's cash. So increase in cash, receive payment for services, meaning that pertains to your income, and income affects your owner's equity and therefore increase your owner's equity. Okay? So I hope you learned something from our discussion for this morning. Thank you. And these are my references for this discussion. Okay, so please follow my YouTube channel, share and like, and you may also follow me on my Facebook. This is my FB profile name. Okay, thank you and see you next time.